What we're doing on that preferred select is we're actually banding it from 65 all the way through 72. And so if you start to do quotes on CSG, quote us at 69, quote us at 70, quote us at 71, even quote us at 72. You see the rate won't change.
Good morning, insurance agents of the senior market. Welcome back to Near and Far. It is Monday, April 11th. So if you haven't subscribed to our YouTube channel yet, what are you doing? You're missing all the great content we're putting out about subjects all over the place with Medicare and industry updates, lead programs, bonuses. You gotta hit that subscribe button and enable notifications to make sure that when we post it, you get it. Additionally, if there's anything that my guests and I talk about in this video you want more information on, email us at nf_studios@neishloss.com. So in this business, most people say about Medicare Supplement that a G is a G. But with these next guests and the product they've brought to market, that's not necessarily the case. So I am really excited to be joined today by Brian Durheim, who's the Vice President of Senior Products, and Craig Rzeski, Director of Senior Product Sales, who work with National General Insurance, which, hey, guys, I'm just going to hit you right out front. Sometimes I hear National General, sometimes I see National Health, other times I see Allstate, and we all know who Allstate is. What company are you guys? Like, let's let our agents know about that. First of all, where are you coming from?
That's fair, and I appreciate that as your opening question, Bill. First and foremost, I want to say, really excited about today. I love the Near and Far format. You know, I can't believe how many episodes you guys have done. Frankly, you're getting quite good at this thing, Bill. So hopefully Craig and I will just do our best to keep up. But once again, appreciate the opportunity here this morning. To answer your question, NatGen, Allstate, what gives, right? So on January 1st of last year, National General was purchased by Allstate. So National General is a wholly owned entity of Allstate. So we are an Allstate company. Our AM Best rating went from A- to A+ ultimately because of Allstate, right? And so you will hear agents in the marketplace refer to us as Allstate because we are owned by Allstate. And you'll even see on CSG, because they list the parent company, Allstate, right? The charter is National Health Insurance Company. That's the name of the charter. And my hope, my expectation is in a few weeks, we have some further information from a brand perspective. But as of right now, everything at a consumer level is ultimately National General. Okay. But once again, that parent company is Allstate. Craig and I are technically Allstate employees.
Yeah, no, that's really important to explain, Brian. Thanks, because I remember when we first started talking, what does every agent do when they're wondering about a MedSupp? They go to CSG Actuarial, right? Because that's the source. And I'm looking, where is National General? Where is it? Where is it? And then I'm looking for Allstate. I'm thinking, okay, maybe it's under Allstate. And I literally just breezed past it like 3 or 4 times. And then I'm like, wait a minute, there's Allstate in parentheses and there's National Health. And that's why I like to try to explain that to agents when they're looking for the product rates, because CSG is the source. But so now that we've got that kind of out of the way, let's talk about this really unique approach that you're taking with your MedSupp product. Because I know that when I talk with insurance companies and our agents are talking about insurance companies, we usually have a really short discussion on the subject of discounts. And really it's encapsulated by how much is your household discount. But with NatGen, you've got multiple discounts. I think it's 3 different discounts that clients can earn. And what's super crazy about all of this is that a client can go from the base rate, like pulling a term back from like 2005, talking about base rate, where they can earn up to 25% off of their premium. Like, talk our agents through this really unique discounting strategy that you're putting together for this MedSupp product, because I think it's really cool.
You got it, Bill. You hit it right on the head. And, to be quite honest with you, the reason that most of those conversations currently about discounts with other carriers are so short, because there's nothing to talk about, right? I mean, they're going to throw out their household discount. They're going to say most of the time it's a requirement that they have this and that enroll and so forth and so on. And those are all great things. And again, I don't mean to put a negative stigma around that. But we have definitely changed the game. Seniors love their discounts. Any senior agent will tell you. It doesn't matter if it's 1%, 2%, or 50 cents, or even a free meal at any one of their meetings or those snacks. I'm sure they're lining their pockets as they leave the buffet line, right? And so we felt that it was really important to really just kind of splash the market. It's been some time since a carrier has really kind of changed things up and shaken up the market a little bit. And so we felt it was time to do so. So what we've done is we have rolled out our Medicare Supplement multi-discounts, right? The standard roommate discount does apply. We've got a roommate discount of 7%, which applies in virtually all the 42 states in which we offer Medicare Supplement coverage these days. We've extended that a little further and now expanded on that to add an additional 3% to that, making it 10% discount if those two people in the house actually apply. Now, I do want to spend just 1 minute here talking about the dual applicant discount, and that's because a lot of our competition have something similar, as we found out. We've done a lot of research. We wanted to make sure that as we roll these discounts and as we roll these are true values and benefits. And so we did a lot of research. And in one of those instances, the dual applicant discount had more negative connotation around it than anything else. And come to find out that that's because other carriers that offer this dual applicant discount, there's a requirement in place that both of the policies have to actually be issued in order for them to both get that discount. And so even though the discounts, even though those discounts could be huge, 14, 15%, if both policies don't get issued, it's all for naught. And so it's really kind of a slippery slope in most of those instances because I'm just going to use the standard household. You've got a husband who's slightly older than the spouse. He would be an underwritten case. You've got the wife that's now coming on in an open enrollment scenario. So she's going to play. But the anomaly is, where's the husband going to shake out? And so, again, with that, a lot of carriers, the way that they offer it, a lot of agents are like, nope, I'm not even going there. I don't even want to dangle that carrot out in front because I don't want to have to pull it back at the end of the day. And so I am super happy, really, really happy to be able to say that we don't administer our dual household discount that way, okay, or the dual applicant. So in any time that I present, in my deck, it just says apply is underlined because all that we require is that they both apply. Either policy gets issued, we'll get that full 10% dual applicant discount, if not both. Obviously, we want both. That's why we put it out there. But again, in that instance, as long as they both apply, if only one gets issued, that one will get the 10% discount. Okay. Now I'll kind of speed things up again. We've got an annual pay discount. Again, we're only one carrier that's offering an annual pay. I've heard of other carriers that do, $2 or $3 off each month if they pay, electronically via EFT or something along those lines.
Right.
But to say, look, if you pay the premium all up front for the year, we'll give you 10% off is unheard of. So we're really excited to be able to offer 10% discount to those individuals.
Craig, I want to talk about the annual paid discount for a second because when we first started talking about your product, and I'm just going to be super honest because our viewers know that I'm just shooting right off the cuff. I heard annual pay discount and I'm like, yeah, okay, so what? Like that was honestly my first reaction because I'm thinking to myself, how many people pay annually? Like, what does that even look like? And I just did like a quick survey of like our top 5 to 6 MedSupp producers. And the only question I asked them, and this is interesting, the only question I asked them was, what percentage of your people pay annually? And they're like, yeah, maybe 1 in 20, like maybe. And I'm like, okay. And I didn't ask them another question. That's all I asked. And then I went back to them after talking to some of our partners in Atlanta. Like we were talking about your product and like some other MedSupp products. And our guys in Atlanta were fired up about this annual pay discount. And I'm saying to Tony and AC that you guys know, I said, come on, fellas, like this is not a big deal. Like, let's just shoot straight here. And they said, Bill, here's the thing to think about. No, like very few people pay annually right now because they've got no reason to do it. Like there's no incentive whatsoever to send the annual premium to the insurance company because it's like you're giving them a 12-month interest-free loan. Like, why would you? But they said to me, go back and ask those same agents if you got a 10% discount for paying annually, would you want to write that check? So I went back to that same group of agents, top MedSupp producers, and said, hey, I know I asked you that weird question about annual, but what do you think the responsiveness would be if we said you can get 10% off your MedSupp premium by paying annually? And to a person, they all said, oh yeah, like we could definitely get a lot of people to do it, because there they actually have a reason. Like I just thought that was so interesting, where initially I think, like if you don't think about it that way, I think agents will discount the annual pay discount, but I think it can be really significant once there's a reason for a client to do it.
100%. It's and in that same vein, we kind of went back and looked at our block, and again, as we kind of rolled out these discounts and rolled out this new kind of offering for this year, Bill, obviously looked at a lot of these things in great detail. And I think it was like somewhere between 7 to 8% of our current block of business does pay annually as it is. Again, in MedSupp, because it is a monetized market, most people that are looking for MedSupp, I think, can afford to do so. It's, to your point, a matter of if they want to, right? And who wants to write that check and, give everybody a loan and, hey, I want to hold that. I want to manage it a little bit more myself. But again, when you throw out something tangible like 10%, especially to somebody who is on a fixed income, they're looking at ways of just trying to make sure they can keep what they have, get what they need, and sustain that for as long as they can. They're looking at discounts as many as they can. And so again, that 10% really will add up and will help them to crest that and keep it as long as they can. So
I'll say this, Bill. Our expectations internally is 50 to 60% of our block this time next year will be on annual pay. We think there's a massive market for it.
Yeah.
Agreed.
No, I'll tell you what, Brian. That seems like a really big number, but following my conversations with those top MedSupp producers, like I was just discussing, I don't think that number is crazy. I don't, because again, you don't know till you ask. And Craig, to your point, for someone that's on a fixed income, that 10% discount can be significant. For someone who's not on a fixed income, like I don't want to say they're rolling in cash, but they're like the more affluent MedSupp consumer. For that person, they're going to say, am I beating a 10% return in my savings account? No. Like, yeah, okay, let's pay it annually, because now I'm gaining on the 0.8% return I'm getting on my savings account, at PNC Bank. Like, so I think it can work both ways on that annual pay, which is really cool. So Craig, I want to hit you on this last discount we haven't talked about. And anyone that knows me knows I love my Apple Watch. And I actually have people make fun of me. They're like, Bill, don't you have a nice watch? I said, my nice watch is my Apple Watch. That's why I wear it. But talk about the activity tracker discount, because this is really something neat, Craig, that I don't know that I've seen before.
Yeah, you got it. So in a technological era in which we live, right? Everything is all about getting access to information as quickly as you can, right? Being, the influencer and, of course, just everything being in one nice, neat little place, right? Historically, technology was something that seniors shied away from. I don't understand it. I don't know what it is. This baby boomer generation was like, nope, not having it. But now all of a sudden, the baby boomer generation is now embracing it, right? We've seen that seniors are just embracing technology in ways that I don't think anybody ever fathomed before. But now that they're retired, they've got all kinds of extra money. They want to have the coolest, latest, and greatest toys and gadgets, right? And so to your point, Fitbit, Apple Watch, everybody's got one. They're connected. They're plugged in with their friends. But we're also finding that not just the Fitbits and Apple Watches, but all smartphones these days, they all have some sort of a fitness tracker, step counter, health app that's built into them or that they can download. And so, again, in a world where, we can, of course, tap into certain things and leverage certain resources and tools to keep track of course, what our clients are doing, what our members are doing, and obviously, keeping a pulse on there, I guess, if you want to say, and maintaining some form of accountability, if you want to say, we'll give them a 5% discount. So all they have to do is take one step, and that's to register their device. Of course, upon getting their welcome packet, there are a guide that gets sent out that will walk them through step by step how to register their device. But Again, there's no daily requirement that they have to hit 500 or 1,000 steps. We're not going to bug them about their blood pressure and cholesterol, things like that. Again, all they have to do is just simply follow the steps to create an account in our portal for themselves now that they're a member with us. Of course, register their watch and or device, smartphone on the program, and they'll start receiving that 5% discount. And that's about it. I mean, it's pretty straightforward and easy, to be quite honest with you, Bill.
Yeah, no, I think it's really neat. And you're right that the adoption of technology with the Medicare consumer is totally different than what it was 5 years ago. Like not like even like certainly more than 10 years ago, but just in the last 5 years, who that 65 to 70 consumer is it's just a totally different group in terms of adoption of technology. And I think it's a great point to make to our agents who are watching today that it doesn't have to be an Apple Watch or a Fitbit, that so many smartphones have that health app where you can do it. Because I anticipated, like when we first saw that activity tracker discount, I'm thinking to myself, okay, like there's got to be some requirement. How many steps are going on? Consumers are going to feel like, oh, this is Big Brother. Like if I didn't do like 1,500 steps on the third Tuesday of the month, like you're going to take my discount. But it's really so easy because all they have to do is register the device. That's it. And they're getting an extra 5%. It's just so easy, especially like, what percentage of consumers don't have a smartphone? I'm sure that there are some, but it is such a huge swath of the market that it seems like that discount could be available to just about everybody if they take that one little step to register the device.
You got it. They just got to take a step, Bill. That's all.
Yeah, awesome. So after talking about the discounts, some of those are just crazy, like crazy good. Like sometimes we talk about crazy and it's crazy bad, but these discounts are crazy good. We haven't even talked about the new underwriting class that you've got on this product, Preferred Select. So Brian, when we had our last call, I was confused about it and you really made it make total sense. Can you talk to our viewers about how the Preferred Select rate class works on your MedSupp product?
Yeah, just one more way we're trying to do things different in the MedSupp market, right? When we went through our block, what we found was there are different spots, there's different risk that performs better than others. And that is how we got to many of the discounts that we just spoke about. But it's also how we got to what we call Preferred Select. Historically, we've offered preferred and standard, right? Just kind of like everybody else, right? And if you were, let's say, a 6-foot individual, you could weigh anywhere from 130 to 260. We take you on preferred. You could be upwards of 300. We'd take you on standard. And if you're north of 300, then you wouldn't be approved, assuming that we're talking about an underwritten case, right? What we found is when we looked at those BMI tables, those height weight charts, when you look at, say, that 6-foot example, once again, someone from 130 to 260, those that weighed from 130 to 220 perform better than those that weighed more, right? Which I don't think is any big surprise. Right. And so what we did was we didn't tighten it. We didn't say like, hey, we just want those. Once again, what we were trying to do from the beginning was look for areas of opportunity where we could pass savings on to the customer, recognizing this is a very rate sensitive market. And if there's any spots where we can be not just like $1 less, but $10 less, $20 less, some states I'm seeing $30 less, Bill. I want to be able to do that, right? And so that Preferred Select is one way to do it. So going back to that 6-foot example, if you're 130 to 260, we'll still take you today as preferred. But if you're 130 to 220, we're going to put you on Preferred Select, which ultimately is a lower rate than preferred. And you'll see that in CSG. You'll see preferred and Preferred Select. And when someone's Preferred Select, and oh, by the way, they're willing to pay annually and or do the activity tracker discount, those are the instances where you're seeing these massive, massive savings relative to the lowest other carrier in the market.
Yeah, no, and that's a great point. And just for the record, my doctor tells me that I would perform better at 220 as opposed to 240. So like I can totally understand that, your fancy actuarial data like tells you the same thing my PCP is telling me, which is, hey Bill, you're creeping up on 240. Let's get down to 220 and you'll perform better. So that I think is kind of easy. But yeah, I think it's important to note that it's not that you guys are tightening the preferred window. Because that was like when we talked on the phone, Brian, that was originally kind of my assumption is you were going with a tighter preferred window, but really you're not doing that. You're just finding an additional discount for folks inside of what you typically would have rated as preferred. And I think it's really important for our agents to understand that.
Absolutely. Yeah. The other thing I'll add around it too is the agents that have been in this business for a while know there's two ways to get a rate increase in the business. Trend, which carriers file annually, and then the attained age increases that are just automatically baked in and pre-approved without having to go back to the state for that approval, right? And so if you start to do quotes, you can see what every carrier has for attained age increase. Just flip the year. If you're going to quote someone at 70, do the same quote at 71, and you'll see pretty much every carrier goes up 3%, right?
Yep.
Lots of carriers, we call it banding in the business. Lots of carriers will band from 65 to 67 or 65 to 68. There's one or two that have gone out to 69 I've seen, right? What we're doing on that preferred select is we're actually banding it from 65 all the way through 72. And so if you start to do quotes on CSG, quote us at 69, quote us at 70, quote us at 71, even quote us at 72, which sees the rate won't change. We've got the rate the same the entire way through. And so once you're in that like 68 plus zone, that's where that preferred select rate really looks strong.
All right, so I want you to say that one more time, Brian, for our agents. Like, and I'm going to oversimplify it, and I want you to tell me whether I'm hearing it correctly. I know that I am, but I want to just make sure our agents are super clear on this. If you put someone on the NatGen Allstate National Health product, you know, who knows what you guys will be called in 6 months, but we put you on this product. Regardless of whether you pay annually, household discount, whether you use the activity tracker, whatever, if you apply for and receive the preferred select rating, your rate, your base rate, will not change from 65 to 72. Is that correct?
That's correct.
Yeah, that is crazy. Guys, I remember when agents were so excited about age banding 65 to 68. We're talking about 65 to 72. The same base rate at preferred select, which makes it incredibly competitive. And it's just a really minor change to the subset on the height weight chart. That's really cool. So Craig, wanted to flip to you here. I know that you've had a recent broadening of your footprint where there were a lot of new states that were added in February for 4/1 effective date in sales. What's the growth strategy here? Because I feel like we're engaging in a period of rapid growth where you guys are kind of broadening your footprint really aggressively.
Well, great point, Bill. And I don't know if I would say we were broadening our footprint per se, because we've historically been in 42 states nationwide. There's a few pockets, in the upper New England states, upper Northeast that we don't offer, and of course Washington State is a tough market to get into. But historically, we've been in 42 states across the nation, and what we've done is, again, kind of roll it out in the areas that we felt that we could make the biggest splash. As well as get, of course, the approvals from the state. I mean, that kind of have to go hand in hand, right? We would love to bring it out to Texas and Florida and roll it out in the other markets right now, just like we did for 4/1 in these other markets. We're just waiting on approvals, Bill. So as it stands, the strategy was get it to as many of our, I'll say, better performing states as quickly as possible. And then, of course, roll it out in all those other markets as we gain those approvals. So as it stands right now, these effectively came in about 21 states, and we are just waiting on additional approvals where we'll likely have a couple more states that'll flip by around June, July, possibly August. So expect more of these multi-discounts and or preferred select rating class to be hitting the market, I'd say about mid-summer.
Awesome. Well, that'll certainly give us more to talk about as we're starting the runway towards AEP. Brian, let me talk to you about my favorite subject, which is cash. I really like cash. I like it more than going to my PCP and having him tell me that I need to lose a couple pounds. But you guys have some cash incentives that you are tossing to agents on their sales. So in terms of your current bonus program for producing agents, can you talk to our agents about what that looks like?
Bill, if this insurance thing doesn't work out for you and near and far is, maybe stand-up comedy is going to be on your list at some point. You've done a good job just making us laugh here this morning.
Well, Brian, I'm only funny for an insurance guy. Like if you put me up next to Chris Rock, I probably couldn't get it done, but I probably could figure out a way to get slapped. Like I'm sure that I could accomplish, but I don't know that anyone's going to be asking me to host the Oscars anytime soon.
Touche. Well, I guess if nothing else, I enjoy our conversations whenever we're at the various insurance conferences and what have you. So
agreed.
Bonuses, yes. What you're going to find from NatGen is we really run bonuses on an ongoing basis. We've had the same bonus program since the beginning of the year that runs through the end of this month. You're going to see very, very soon. We're going to be launching a new one for May and beyond. What we're currently doing is we're currently offering $200 for all underwritten applications. We do a fair amount of business in what I call like anniversary/birthday states. In those states, we pay $150, California, Oregon, Missouri. And there's also been some that have recently been added in Nevada, Idaho, et cetera. And then for any dental apps, if you're doing a MedSupp with the dental together in one combo cart, we'll pay $50 additional for the DVH specifically. So bonuses are a big thing of it. And everything I don't want to get lost kind of in this, when we went through and relaunched this program, if you will, we also increased commissions. So you say you like cash, bonuses are one time, commissions are, years 1 through 6 and eventually through perpetuity. We increased commissions in the majority of our states, what I call our generic states. Yep. Commissions on F&G went up 1%. So street is now 22% for F&G in most states, and street is 24% on Plan N in most states.
No, that's tremendous. I totally forgot about even mentioning the commission increase, but that's a good point because you don't get into the senior market for first year commissions. Like that's not why Medicare agents and senior markets in general are successful. It's all about recurring revenue. And to that point, cash bonus is great. Like I'm going to take that money. I'm going to go buy my son a new hockey stick because Lord knows they're super expensive. If I were a producing agent, that's probably where all my bonus cash would go is to paying to the Bauer Hockey Company for sticks because my kid keeps breaking them. But that commission increase, paying out year 1, year 2, year 3, year 4, and so on and so forth is really important, especially with people who are on the preferred select product because their rate's not going to change between 65 and 72. How great is that retention going to look?
Absolutely.
That's a great point, Bill. And if I can, just for a moment, I would like to exploit that just because, again, in such a 50-50 market split that we're in these days, people are going Med Advantage, people are going MedSupp. And there could be different reasons as to why they sway one way towards another. But from an agent perspective, a lot of agents are pushing Med Advantage because of that first year comp. And I respect that. Again, they're looking at that first dollar. They're looking at just capitalizing on it more upfront as opposed to on the long run. What that actually translates to, though, is more engagement more frequently, which is just more time. So if you're looking at building a lucrative business with a large block of business, you're kind of preventing yourself from getting to a larger, book of business because you're spending so much time just kind of coddling this little group over here, year over year, making sure that they're making the right changes during the open enrollment period, et cetera, et cetera. What we're looking to do is provide an opportunity for you to be a successful agent, get your clients into a great, stable Medicare supplement plan that with very minimal engagement, you touch base with them, you make sure everything's going well, they're happy, and for that 6-7 year block where their rates aren't increasing, it's just a cordial conversation. It's a how you doing, my friend? Let me know if you have any questions. Tell your friends to call me so I can hook them up with the same NatGen Allstate plan, and we'll talk to you at Christmas. Have a great day, right? But I think that's more or less what a Medicare supplement agent will experience as opposed to with a Medicare Advantage agent and what we're looking to do in the market as well.
Yeah, no, that's a great point about persistency. That's certainly our agents that are writing Medicare supplement in any sort of volume certainly enjoy that. Well, gentlemen, I can't tell you how much fun I've had today because I really didn't think that I'd be talking about visiting my PCP and Chris Rock during the same episode. But hey, you never know what's going to happen on Near and Far. You never know where the conversation is going to go. But again, want to offer my thanks to Brian Durheim and Craig Brzezinski from National General Insurance Company, owned by Allstate. So, gentlemen, again, thank you so much for joining me today. I really appreciate it.
Thanks, Bill.
Thank you, Bill.
Yeah. So we will be back with you on Wednesday, April 13th, bright and early at 7 a.m. This has been Brian and Craig. I'm Bill. This has been Near and Far. We'll see you on Wednesday.